Pie charts, line charts, bar charts. I'm sure all of these look and sound familiar. But what about this chart? No? Not ringing any bells? I wonder why they don't teach this chart in schools. Is it because it's too complicated? Nope, not at all. All right, then what is it? Why would they not want us to learn how to make money for ourselves? You know why. Luckily, you found us. Our mission is to help you build wealth one video at a time. Welcome to the vault. What's going on, family? It's your favorite hairless YouTuber back again, like clockwork, with the must-see video. As always, before we get into it, let's kick off today with some Monday motivation. Don't buy things you can't afford with money you don't have to impress people you don't like. And I'll say that again for the people in the back. Don't buy things you can't afford with money you don't have just to impress people you don't like.
Amen.
Amen.
In today's video, we will talk about the number one tool in an active trader's tool belt, understanding the stock charts. The technical term for this is technical analysis. By the end of this video, you will understand a basic but also very significant concept of technical analysis, support and resistance. We'll cover what they are and how to use them to your advantage. And of course, you know I'll be throwing in an extra treat at some point in the video for sticking around with me today, so make sure you stay tuned for that. If you want us to make more videos more often, be sure you support the channel by liking the video, subscribing, and making sure notifications are turned on so you don't miss any new content. Without further ado, let's get it. Now, I know I've thrown this term technical analysis around a lot in previous videos, and that alone should tell you how important I think it is to trading and investing in the stock market. But okay, so what is it? By definition, technical analysis is a trading discipline used to identify trading opportunities by focusing on historical price patterns and stock trends. Basically, it stands on the idea that history repeats itself. The stock chart gives you an organized look at how the stock's price has moved since the company's stock first became public. With that information, you're able to predict the price movement by looking at different types of indicators like price trends, chart patterns, and today's topic, support and resistance. TA is an extremely powerful tool to have at your disposal in the markets. With TA, you can make sound investments with barely any information on who the company is and what they do. Sounds crazy, but believe me, some traders are extremely successful relying solely on technical trading strategies. Being able to read and understand the charts is the ultimate cheat code to mastering the market. The concepts of trading support and resistance levels are undoubtedly two of the most highly discussed attributes of technical analysis. These terms are used by traders to refer to price levels on charts that tend to act as barriers, preventing the price of a stock from going in a certain direction. Resistance is a price level where an uptrend can be expected to pause and/or reverse due to a concentration of supply from increased selling interest. Now, just imagine being in an auction. The more the price of an item increases, the less interested buyers become. In the stock market, it's no different. When buyers lose interest, sellers take control and move the price down. Imagine we're looking at XYZ stock and the price rose to $50 before sellers took over. The next time it comes up to $50, we can expect buyers to lose interest again. In this scenario, $50 is the resistance level because the buyers find this price to be too high for XYZ. I equate resistance to a ceiling because now this is the ceiling for the price for XYZ until they give us a reason for them to be worth more. The opposite is true for support. Support is a price level where a downtrend can be expected to pause and/or reverse due to a concentration of demand or interest from buyers. And let's take the auction situation again, but let's put it in reverse. Let's just say the price got up to $100 for this item. Buyers lost interest and started backing out. Now the auctioneer has no choice but to start decreasing the price. Okay, no one wants it at $100. What about $90? Okay, what about $85? Okay, what about $80? And so on and so forth until buyers regain enough interest in this item to buy in and move the price back up. The same is true for the stock market. As the price of a stock drops, demand for the shares increases. When XYZ fell from $50, let's just say it got as low as $35 before buyers regained enough interest to take control and move the price back up. The next time it ever comes back down to $35, we can expect buyers to take control again. $35 is now the support level because the buyers see this price as a discount for XYZ and will more than likely want to load up on shares at this price. If we see resistance as the ceiling, support is the floor. All right, Sensei, that's all fine and dandy, but how can I apply this to my trading? How does this help me? I'm glad you asked. Once a level of support or resistance has been identified, those price levels can now serve as potential entry and exit points. Because as the price reaches a point of support or resistance, it'll do one of two things: respect it and bounce back away from the support or resistance level, or violate it or break the price level and continue in its direction until it hits the next support or resistance level. In XYZ's case, you would want to buy at $35 its support and sell it at $50 its resistance. It's really that simple, but it's also not that simple.
What?
You should never rely on one indicator or signal like support or resistance to make trade decisions. Betting on one indicator does not bring consistent results in the market. You want to have at least 2 or 3 signals telling you whether you should enter or exit a position. Really, the more the merrier, because without it, you're just guessing. Now, I know we haven't covered any other indicators or signals on the channel yet, but trust me, it's coming. But in the case of support and resistance, the best practice is to wait for confirmation that the stock will respect that level before entering a position. You don't want to assume that just because $35 was support the last time that it will be support this time. Confirmation over anticipation. Now that we have an understanding of what support and resistance are, let's apply them to the stock chart. We'll start by taking a look at the stock chart in its simplest form, because looking at this, I'm sorry, my bad, I didn't mean to scare you, but you can see how that can be a bit much starting off, especially for beginners. The platform we'll be using to show this chart today is tradingview.com. It does offer additional features with its paid subscription, but just between us, the free version gets the job done, if you can deal with an ad here and there. Use my link below to get your free account started today.
For this example, we'll take a look at Beyond Meat Incorporated. Typically, when I first start charting a stock, I like to look at the bigger picture first, going back at least 5 years on the chart if possible. Beyond is fairly new to the market, making its debut on May 2nd, 2019. So that's what we'll be working with today. When plotting your support and resistance levels, you can start with your lowest and your highest points, because for any stock really, all-time highs and lows are usually great levels of support and resistance. For Beyond, its all-time low or its lowest point will be here, and its highest point will be here. And there you go. We're done. See, that wasn't so bad, was it? Okay, all right. Clearly, this is a good start, but these support and resistance levels are a bit too far from the current price to do us much good in the near-term future. We still want to keep them there as a reference, just in case Beyond ever returns to these levels. Now, you can start drawing your support and resistance levels on your chart from top to bottom or bottoms up. That's completely up to you. Now, since Beyond is currently on a decline, I'll start with support levels bottoms up so we can see just how far it may fall before reversing up. Keep in mind that for support and resistance, you want multiple touches on the line to solidify being a good support or resistance level. I typically shoot for about at least 2 to 3 solid touches. But of course, the more the merrier. For our first support or resistance line, we're going to draw that about here at $73.21. Why? Because as you can see here, we have a lot of support from December of 2019 to January of 2020. Have 1, 2, 3, 4, 5 solid touches on this line before it took off to the upside. A strong indication that this could be a very good support in the future. Now, keep in mind that support and resistance will almost always eventually be broken. That doesn't make it a bad line of support or resistance, because what makes a good support or resistance is its versatility. For my note takers, write this down. Once the support is broken, meaning the price falls below it, a good support level will then become resistance, as you can see here by our line drawn at $73.21. Let's fast forward. It takes off, then eventually comes back down. Now, this also is a note to our confirmation over anticipation, because as it approached this area, if you had already drawn the support line, it'd be easy to say, hey, it's at support, let's buy it. Buy support, sell a resistance, right? When this is where that issue comes in. You want to wait for confirmation that this is going to be respected as support again, because as you can see, it broke right through and fell $20 lower than where the support was before it eventually reversed up. Now, keep in mind, this is March of 2020. So COVID crash, a lot of other factors influencing the fall like this, but there are always going to be other factors in the market. So you have to be cognizant of that and know that confirmation is your best bet before getting into a play. Now, we have support here. It breaks this line, comes down, and when it comes back up, you'll see now that it'll test it as resistance. What was once the floor for this stock is now resistance for this stock, as it was trying to make a move back up. It was rejected and came back down before it eventually broke out again. But as you can see, it was resistance here, broke out, and now it's support. So once support is broken, it becomes resistance, and once resistance is broken, it becomes support. All right, now for the rest of our support and resistance lines. I'll see the next one will be about here. Why? Because you have support, 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 resistance, resistance, resistance again here. So I can expect this to be a good support and resistance area if it ever comes back down to that. And we'll just fast forward through the rest of the plotting of these lines. I still want you to see where they go, but you get the gist. We scan the chart left to right, and we plot the lines where we see multiple points of support and or resistance. And I know it doesn't seem like it should be that easy, but it's really not hard. That's all there is to it. Once you understand what they're telling you and how to read them, the rest of it is like a walk in the park. And boom, there it is. A full support and resistance chart for Beyond Meat. It's pretty easy, right? Like I said before. All right, you know what that sound means. It's time for another stock alert. It was no coincidence that I chose the chart support and resistance on Beyond today. I don't believe that it's ready just at this moment, but it seems to be prepping for a nice move up. And as you can see by the chart, Beyond is no stranger to big moves in small spans of time. As we can see here, from September 8th of 2020 to October 9th of 2020, that's a month, Beyond was at $125 and rose as high as $195. That's a great move for a month's time. Beyond is a buy at its current price, but a strong buy at around $101, as you can see by our support line here and other indicators that we haven't taught on the channel yet. We will continue to monitor this potential move and update you if anything changes. As always, make sure you do your own research and due diligence for any plays alerted on this channel or anywhere else, just to be sure that it fits your criteria and your trading plan. And of course, invest and trade responsibly.
Let's bring it all home. Technical analysis is used to identify trading opportunities with indicators that focus on historical price patterns and stock trends. Support and resistance are indicators that identify floor and ceilings for a stock's price. The support is the floor because it is expected to act as a barrier to stop the price from falling below it. Resistance is the ceiling because it's expected to act as a barrier to stop the price from rising above it. We generally want to buy at support and sell at resistance. Also, never rely on just one indicator. Confirmation is favorable over anticipation. Before we close today's video, remember, don't be afraid to fail because it is in the darkness where we learn to appreciate the light. No battle is won without a fight. Failure should only change the strategy. never the goal. If you've enjoyed this video and want us to make more videos more often, be sure to hit that thumbs up button below and subscribe to the channel if you haven't already. Also, comment below your thoughts and questions to let us know how we can continue to improve the channel. This channel and all of its content is made for you. Thank you for watching this video, and I'll see you in the next one.